What is up, guys? Happy Monday. Today, we are going to continue talking about risk to reward and how we can use that in our favor, right? Understanding risk to reward, guys, super important. Everybody needs to understand risk to reward. The better you understand risk to reward, the more confidence you bring and you feel coming into the market, right? So let's go ahead and break that down. This was actually a setup that we had called out on the levels called like maybe a month ago. I don't even know. When was this? July 25th. That was about a month ago because we're August 18th right now, right? We're about 7 days away from the 25th, so almost a month, literally. So we called this out. The market is in profit, doing what it's supposed to do, right? Now, I guess we can go ahead and break this down. We can go ahead and use this as an example. I mainly just save this into our pairs just so we can continue to monitor it and see if it actually hits our 1 to 3 based off of our stop loss and everything here. But everything so far is playing out in our favor. 1 to 1 break even, or I actually use this now. I partial out at 1 to 1. 1 to 2, I break even. So no matter what, I should have already partialed out, have already had hit break even. Now I'm letting the rest of the trade play out. Okay. So if we took EUR CAD about a month ago, EUR up. Super nice. Now let's go ahead and just break this stuff down. We can just delete this for the visual. Okay. Now, on the daily time frame, why were we looking at buys in this area? Well, that's fairly simple, right? The market's in an uptrend. The market's in an uptrend, right? That's one, right? The trend is your friend. Okay. It's much easier to swim with the stream rather than swimming against the stream. So if the stream is flowing upstream, I want to continue swimming upstream, right? So we can easily see we have a break of structure to the upside. Awesome. Let's go ahead and just zoom in a little bit more because this right here is our breakout rally. Now on the daily time frame, this is it. We have 1, 2, 3, 4, 5, 6, 7, 8. 8 candle breakout rally, right? I want to follow that breakout rally to the last selling candle that gives us the breakout rally. So let's go ahead. Let's follow that rally right back down to our last selling candle, and that's this right here. So we box that up. Our stop loss is below the low. So this is already an opportunity we can be taking, right? Now, again, this would be my entry. This would be my stop loss. Minimum 1 to 3 risk to reward. Now, this can obviously be our first trade in our 10 trade cycle if we were focused on EUR CAD, right? So I'm just going to leave that there. Now, I also want to see if we can continue with the bullish bias. What can we see that can help us with our bullish bias? Now, if we play it back to here, what do you guys consider this right here? I want this to be a vocal or interactive call. If you guys can participate, that would be very, very awesome. What would you guys consider this? If you guys can see it, go ahead and draw it on my chart, right? Or you guys can unmute and tell me what is that? And it's okay if you're wrong. Let's just be vocal. What would you guys consider this right here?
Inverted.
An inverted liquidity? Okay, awesome. Let's go. I do see the inverted, but I also see liquidity. Now, this is what I'm seeing, right? When anytime I see, Kenny, if you can delete that line, that would be great. What I'm seeing right here is mainly liquidity. And I'm looking at it like this, right? Because I already know like the next candle, liquidity. And even though like it does sweep the high barely, like that's still like fairly equal highs. Like if I know that the market needs to continue higher, to me, that's still equal highs. Okay. Now you're not wrong, Kenny. If you can delete that line, that would be great though, bro. That you're not wrong.
Yo,
That is
my bad. My Wi-Fi is acting up.
all right. Let's go ahead and stop sharing real quick because Kenny's Wi-Fi is acting up. Right. We did have a liquidity sweep there. But however, However, right? If I know the market, this is the daily time frame starting point. Yes, I do see we have a break of structure to the downside or a liquidity sweep, however you like to look at that, right? Now, we also have a change of direction. Now, there's two things that don't really make me want to take this trade idea. Now, again, we could run our risk to reward and go about this in a 10 trade cycle, right? So we can break it down. But again, for me, I wouldn't really like this because I'm also seeing that we have a lot of liquidity here as well. So in the future, I'm expecting, I would like to see, again, this is me already foreseeing, right? We have a daily buy zone here. In the future, the market should come back here. Now, as I'm waiting, I'm seeing the market build liquidity. So in my head, I'm saying, okay, cool. We could possibly go lower than this. It might not touch this, but we can possibly go lower and then we can start going back up. Okay. That's what I'm thinking. Now, as that comes into play, I'm also thinking that this head and shoulder here isn't really the cleanest. I really don't like when head and shoulders can build liquidity and then go higher, right? I really like when the market gives me a nice sharp bottom. The market gives me a low, attacks, and then we start taking off, taking off, taking off, right? When anytime we get some type of equal low bottom or like trend line bottom, those aren't really my favorites. Okay. I just got to be honest. But anytime we have a clean sweep, right? And then the market starts to move efficiently, I'm like, okay, this is definitely something I like to trust. But that's also, you guys have to understand, like, you guys are going to have to see this with repetition, right? That's what I mean about being selective. So let's just go ahead. Let's say we did take this trade, right? Because I do know some people are they are seeing this and they're going to run the risk to reward. So let's just say this is trade one in our 10 trade cycle because we're looking for buys. And if you see that, I understand why you're taking buys. Okay. So let's go ahead. We take a loss. Okay, cool. We're down negative 1%. That's fine. That's okay. Cool. So now let's regroup. Let's refresh. Let's refresh, right? Again, if I'm still anticipating buys here, I'm still looking at this as an equal high. I would like to take these highs in the future. I would like to go ahead, look for opportunities, and continue to make new highs. Okay. Not only that, I believe we just had a break of structure to the downside. If not, we'll just continue real quick. We have a break of structure to the downside. Cool. Now at this point, we can already be in on trade opportunity number two. So right now we're in on trade number two in our 10 trade cycle. Okay, awesome. We can ignore that. We can leave that for now. Now, if this is my break of structure, guys, to the downside, let's move this over here. If this is my break of structure, this is my change of character for higher time frame. We have lower low, which is my shoulder, lower high, which is my neckline. We have the low, break of structure. This is my head. So in the future, I want to see if we could make our way above, close above, so we can continue looking for buys. Give me a 10 if that makes sense right there. So going based off higher time frame, I'm still waiting for these buys. Right now that the market is in our zone, we can start participating and looking for the buys. Okay, cool. Now let's go ahead and drop down to the 4-hour time frame. Now on the 4-hour time frame, this is what I'm seeing. This is my closest break of structure to the downside. Again, anytime we're looking for buys, guys, we want to follow our breaks of structures all the way to our buy zones. All the way to our buy zones. Locate your breaks of structures, find your change of direction. Now let's take a look. Market gives us our change of direction. Now, at this point, I would like to be looking for buys in this area. Let's see if the market gives us that. The market doesn't come back. But technically, where are we at? Technically, our second trade is in profit, right? We have already partialed out. It hasn't hit TP, hasn't hit the main TP yet, but technically we should be at break even and partialed out. Now, again, this is only on the 4-hour time frame. Could we have gotten in a bit lower? Could we have gotten in a bit lower? Because I'm going time frame by time frame, right? Maybe you're not the trader who goes to the 5-minute. So I'm breaking it down to you on the 4-hour. Because we haven't gotten an entry, it doesn't mean it's not going to come back down here, right? We did get the change of direction, which means this is my shoulder on the daily. And then we have a starting point right here on the 4-hour. So I still think we can make our way down. When the market can go higher, make its way higher. And then when it starts to come back down, I'm already 10 steps ahead. I'm already waiting. I've been waiting here since the market broke above here. Give me an 8 if that makes sense. Every time frame is going to have their story, right? So because we have the change of direction here, I've already been waiting for buys to come back, right? So I'm already going to be 10 steps ahead, okay? Now, let's go down to the 1 hour and see if we could have caught it a little lower. Because again, I want to try to catch it as low as possible, okay? As low as possible. So let's just delete this for now. Now, I believe I can already see it. Let's go to the 30-minute to see if we can see it a bit more clear. It doesn't give it, but it's okay. We have our lowest break of structure to the downside. Again, we're just continuing to follow our break of structures, right? Where's my closest break of structure? Right here, my change of direction line. That is not a change of direction. Very, very close. This is my change of direction. So guys, I have two zones. We can use this as an example of running our risk to reward, okay? In this time frame, let's just leave it like this, right? Because I do like this setup. We do have left shoulder, head, we break out, and as we change direction, we start to build liquidity, right? We do start to build liquidity. So now let's take a look. As of right now, opportunity 1 is my starting point. Opportunity 2 is my left shoulder. Now look at this, guys. That's a pretty good significant difference from zone to zone. Let's delete this for right now. Or let's just take it off the 30-minute. Does that make sense? Our zones are kind of a bit away. So we have opportunity here and an opportunity here. Now, again, I'm not a fan of tight stop losses. If you're looking at the lowest low or the lowest wick for the starting point, that's it. So if you want to put your stop loss here, you can. But because our zones are a bit tight, instead of putting my stop loss way down here, I still want to give my trade a little bit of room. So I don't mind doing it something like this. I don't mind doing it something like this, right? If I know that my next zone is down here, I'm going to give my trade a little bit of room, because how many times have you seen it where the market comes down, hits your stop loss, and then goes your way and then misses this opportunity? It happens sometimes, right? So I'm a fan of spacing this out. Now, again, this is only 20 pips. A lot of you guys risk more than 20 pips on the 1 minute on indices, right? So like it might look wide, but again, we're on a Forex pair. So I don't mind giving it a little bit of space. Okay. But again, totally up to you. I just want to give you that information so you can do with that with what you will, right? If I know my next zone is here, I might as well just give my trade a little bit of room to play. And if it does hit me out on stop loss, then okay, I'll get put right back in with my next trade. Give me a 2 if that makes sense. Totally up to you, right? Now, again, we're on the 5, 30 minutes. So again, this is only 20 pips, bro. 20 pips, not that much. Same for the stop loss down here. Let's see how much this is. 22 pips. Not that much, guys. And again, we're scalping this. This is a scalping area. But again, we would like to go long and continue with the bullish bias up to here. Because again, remember, we're trying to catch this trade at the lowest point. We're trying to catch that trade as low as we can into this daily starting point candle. Give me a 1 if that makes sense. So we're trying to catch this trade as low as possible. Okay. But again, we're still going to run our risk to reward. So now check me out. We have 2 opportunities. I know that this first one can be a loss. Give me a 1 if you guys are with me. Give me a 1 if you understand that this trade here is possibly going to lose. But you have to be okay with that because we have our next zone marked up, locked, and loaded. Okay, risk to reward. Let's see. I'm liking this still because we do have our liquidity target. Okay, cool. We took a loss. Fine with me. I was willing to risk. That's my second trade, or my third trade technically. But let's just go third trade. Yeah, why not? Third trade. Technically, one hasn't lost yet. Negative 2%. Cool. Just to remind us, I'm already in on the other. So let's go ahead. We can delete this because this was obviously not the hitter. And now let's go ahead and run it. Oops. And the market does everything that we wanted it to do. It respected the low. It continued to go higher. We could have definitely ran it back. We should have ran it back because we should have ran our 1 to 2s and 1 to 3s. But nonetheless, the market doesn't even come inside here again. 1 to 1, I would have taken partial right here. As soon as the market hit my 1 to 1, I'm already taking partial because again, we got to remember our lot sizes, right? So boom, take partial, break even, market never comes back. I had already taken money off the playing field. Taking money off the playing field, I'm at break even, and this trade is a 1 to 14. But this is how we also go from macro to micro. So now, guys, we're starting to tie everything in. And I've taken my time on a ton of different things for a reason. So, and the thing is, I look at charts on higher time frames for a specific reason, so we can see things cleaner. But this would be a macro perspective. I don't want my stop loss to be this big with a 1 to 3 risk to reward. Like, that's cool. Yes, that's the play. I want to run it. But at the same time, who doesn't want a 1 to 14.5? Type in a me or unmute and say me if you want a 14.5 risk to reward. Let me know. Who wants the big risks to rewards? But who wants them the right way, though? Who wants them the right way? Because we just broke and I don't even trade EUR CAD. And honestly, I'm gonna be 100% honest on my mama. I didn't even take a look at this at the 30-minute. I didn't even know all of this happened. Market just gives a good example. Right? Market just gave a good example. Now look at that was just one way to look at it. That was the 30-minute. Now again, that was a positive 0.14 or plus 14. So let's see. Plus 14 minus 2 equals, plus 10. Oh, I'm sorry. No, it's not. My dumbass. Plus 12. Boy, I don't even know basic math, boy. But plus 12. We're up 12%. And technically, that's not counting the trade on the higher time frames, right? Technically, that trade is still in, hasn't hit TP. We're probably up a little percentage off the partial, but technically has not hit TP yet, right? But again, that was just the 30-minute. We actually, if you wanted to stay on the 1 hour, you definitely could have. Same rules apply. Break a structure, change of direction. But now look, instead of your 30-minute starting point being here, oops, let's go back. Instead of your 30-minute starting point being here, right? Notice on the 1 hour time frame, it's actually this whole thing. So then that gives a different perspective, right? That gives a different look. If we didn't drop down, if we didn't skip from the 4 hour to the 30-minute, we could have possibly taken this trade and removed that one loss that happened right here. Does that make sense? We took a loss right here on the 30-minute because the starting point was like this with this wick. But if we would have taken the 1 hour starting point, there is no loss, right? We're still only down one, which gives us a 0.13 plus 13%. But that's fire, in my opinion. That's really fire. Now let's take a look. Let's take a look here. We can delete this stuff. Let's just go with the 1 to 3. So let's say we did take the -2. We took a +3 minus -2. We're up +1. Let's just use this, right? Now, let's continue. I can see we have a break of structure here. BOS of the upside. My starting point right here. Let's remove. Let's stay fresh. I know I have a starting point there as well. So again, I'm still running my risk to reward because I have a buy zone here and a buy zone here. I got bullish confirmation right here. So I should already be looking for buys. Based off the bullish confirmation, market gives me a buy zone, a brand new buy zone, and left a buy zone. So I still have to run my risk to reward. So let's take a look. Let's drop down to 30-minute and see if we can see some type of structure. This is what I'm seeing. I like this right here. Support, support, BOS. I'm going to use this as my left shoulder. This is my change of direction here. Now let's take a look. I have two zones. I'm not going to use the 15, and I'm going to stay with the 1 hour. But let's take a look. Stop loss. Again, I give my trade a little bit of room at the bottom. 1 to 3 risk to reward. Let's go. Let's take a look. Let's see it play out on the 30-minute. Market puts me in. Let's see if it gets me, hits me one more time. It does. Looks like that was the real move. Let's take a look though. So 1 to 1, I had already partialed out. Oops. This is my partial zone. 1 to 1. Let's make this green. 1 to 2, this is my break-even zone. And then 1 to 3. So notice, if I used to do break-even TP1. I stopped doing that. I would have already hit break-even. If I would have got it in again, I would have hit break-even again. So this is why I switched it. But let's take a look, though, because I can still take a loss. But I am liking this structure here. Break a structure to the downside. Change of direction to the upside. Let's see if this zone holds. I do like that, especially because we do clear all this liquidity out to this left-hand side as well. Let's take a look. I don't know. Let's take a look. I don't even trade EURCAD. Let's see. Woo, look at boy. I bet you would have hit. You would have been like, "Yo, I'm out. I'm out the trade. I'm out the trade." Happens. I still haven't hit TP2. Haven't broke even yet. Let's see. Hit TP2. We should have taken partials. Hit break even. Do we take profit? Yes, we do. So again, 1 to 3, we had. This is our fourth trade, I believe. We're up +1, +3. That is +4. Boom. Is this making sense to you guys? Let me know, bro. Because if it doesn't, I need to break it down another way. Like I really do, because this right here is so effing important, guys. So effing important. We're up. What are we up? Where are we up? What are we up? +4, right? Okay, cool. Break it down. Now, again, guys, look at how we're focusing on one pair. We haven't even left EURCAD. Who trades EURCAD? Nobody. I know nobody who trades EURCAD. But when you focus on one pair, it doesn't matter how the structure looks. If you understand breaker structure and change of direction, guys, stay focused to the plan. I don't even trade this. Look at how it's respecting. This is the dominant low. I'm going to use this as my stop because this looks too iffy, right? That looks too iffy. We could even, if you're someone's like, yo, that's too big of a stop loss, just put it in the middle. It's not that big of a deal, bro. Again, only 42 pips. A lot of you guys risk that more on NAS on the 1 minute. So cry me a river. All right. Cry me a river. Trade 2. All right, no, that's not right. That's trade 5. Trade 5 up 4%. Let's take a look. Market looks like it is building liquidity here. I'm liking that. But let's take a look here. Again, not a fan of this equal high type structure. Let's see, does it do it again or does it clear it? Clears it by a little bit, but if it clears that by a little bit and drops down, that's still looking like equal highs to me, right? If this is my higher high, higher low, higher high, if we can somehow make it down here to make a higher low, I would like to make new highs, right? So sometimes, if not almost all the time, this back and forth movement, you're going to have to ignore, guys. It's consolidation, it's liquidity, but it is also a higher high. And if we can make it down here, it is a higher low to make new highs. Okay, now let's take a look. Decided not to. That's okay. And it's still in profit. It is what it is. Not every trade is meant for us. Happens. Happens. Continues going higher. What can we do? It is what it is. But off of EURCAD, you're up 4%. Super fire. What other pair do you guys want me to look at and break down just like this? Don't say indices, bro. US 30. Check NAS. Oh, bro. No. GU? All right, let's go GU. All right. Take a look. Take a look. So this is what I was seeing with GU. We had a break structure to the downside, change of directions to the upside, but it also gave us a break structure, right? This is a higher high, higher low, higher high, right? With that being said, we have starting point here, and we have a shoulder here, and our stop loss at this low. Now, depending on spread, you definitely got hit, all right, depending on what the spread was that day. And if you also put your stop loss very, very tight, you possibly also got hit out that day. But if you account for spread, let's say spread is like, I don't know, 15 pips. Go ahead and give yourself 15 pips extra on the back end. That's why you'll always see me give a little bit of extra on my stop loss because of spread, especially if you're trading Forex pairs, right? I'm never super, super tight. I'm always like this, just a little bit. I'm not saying anything like this, like that's crazy, right? But something like this, like, hey, it's okay, right? Yeah, Beanchy spreads an MF for sure. Like it bugs me for sure when I get wicked out like this and then the market just goes my way, like so, right? But nonetheless, the trade technically does not hit stop loss. So possibly, again, depending on spread, you're possibly in or out, right? But this is what I'm liking though. We have a nice sharp move to the downside and a sharp right move back. I'm liking that a lot, right? The dollar is continuing to drop, which means GU may continue to rise. Right now, we just cleared liquidity, break a structure to the downside. I know you guys are seeing this. I know it. I'm not saying this can't happen, right? Change of direction. We're about to hit the right shoulder. I'm not saying this can't happen, but what if this move, this right shoulder comes back down to the brand new buy and we continue going higher? Because the dollar is dropping, that could be a thing. The GU may not be ready to sell 100% yet. If we had the change of direction to the downside, I would have liked to see more liquidity being built up. I would have liked to see something like this. Let's hang out here for a minute and start making our way up. So when we come back to that right shoulder, we have some incentive to tackle, but it doesn't. We change the direction and then immediately shoot our way back up, right? So that sell, it looks a little bit iffy to me, right? If it looks good to you, then take it. Honor your risk to reward, honor your percentage. But again, for me, I'm being very selective on a lot of my trades. And I think GU can continue to rise if the dollar can continue to fall. That's my bias, right? It's okay if you disagree. That's totally fine. As long as you're looking at the market using the same way I am, BOS's change of directions, run your odds, do what you got to do. But because I'm seeing the dollar continue to fall, I would like to see if you can continue to rise. Now, with that being said, this is my break of structure here. My change of direction to that would be here, which is fairly close. We're almost there, right? Touched it, rejected off it, which makes sense because technically this is a starting point. However, it does hit stop loss, happens, right? It is what it is. Now, again, if we can hold this zone and continue just to hang out right here, and then even go higher and change direction, confirm, and then even hold right here to longer, that would be a lot better. So when we come back down, we can go ahead and tackle this, send it back up. Now, again, this could happen based off of this shoulder here. That could happen. I'm not saying this shoulder cannot get a move. I'm just saying I would rather go with the trend. Give me a 2 if that makes sense. And again, as long as you follow your rules when the market gets here, if you follow your rules and you follow your break of structure, change of direction, run your odds. Why not? Run your odds because that can happen to where it sends the market back down to our next buy, and then we get that next move higher, right? So run your odds, guys, if you want to go ahead and follow the confirmations, okay? Now, with that being said, let's go ahead and see if we can have caught these buys even lower, right? Let's say this does hit our stop loss. Okay, cool. Again, this is all metaphorical speaking, like all hypothetical, right? But I'm trying to run risk to reward. I'm trying to break that down to you guys. So again, we were up +4. Let's just say spread was an MF for that day. Hit our stop loss. We're down 1%. We're still up 0.3%. Okay, happens. It happens. What can we do about spread, right? What the hell? What? It is what it is. Now let's drop down to the 4 hour. Now, I do see an opportunity. I just don't see if it actually snipes the way I think it does. Let's delete this because that zone obviously was not it. Now, again, guys, anytime the market is dropping to my zone, what should I be doing? As the market is dropping to my zone, what should I be doing, guys? Marking up my break, yes, adjusting my breaking structures and my change of directions. Change break of structure. Notice break of structure right here. My very last break of structure, which means this is my very last, well, not very last, but this is my change of direction. Very last break of structure, change of direction. Let's break it down in the 1 hour so you can see it a bit clearly. Boom, a lot better, right? Break it down a lot better. Lower low, lower high, consolidation, liquidity sweep, almost hit your stop loss, but let's say it did, right? It hit our stop loss. Market was not on our side that day. Boom, it did. Change of direction. Do we have another setup, guys? Yes or no? Can we start looking for another setup? Yes. Now, this is the thing. Why should we be looking for another setup? If the market did hit our stop loss, which I'm saying it did, right? Let's just put that shit, boom, market hit our stop loss. Well, yeah, we definitely want to make that moolah. But going off of the rules, guys, our candle does not break and close below our stop loss. Just because the market hit our setup or hit our stop loss does not mean the setup is 100% over. It does not mean that. It just means it took your money that day. It picked your pockets. You paid your investor tax that day, right? But the market did not violate the setup. Now, if the candle would have looked like this and we close below, buys are no longer in order. Let's start continuing to look for sells. Let's now switch our buys from buys to sells. But the market doesn't close below. It hits our stop and then immediately changes direction. So we have two setups. I see we have, oh my goodness. Don't take me off, market. That was the setup I was hoping for. That was my starting point setup I was looking for. So it happens. What can we do? Well, this is the thing, guys. This is why I love trading so much. This is why I love trading so much. Just because the market misses our entry doesn't mean we're out of the trade just yet. Let's drop to a lower time frame. Every setup we find, we can always drop down and look for our breaks of structures. Just in case if the market wants to miss us, like it did right here, if we could find a change of direction, we could run our odds. And again, it takes us right back to running our risk to reward. Boom. Can you guys see it? Circle the setup if you guys can see it. Circle the setup if you guys can see it. Circle the setup, guys. If you guys can see it, go ahead and do it. If you can't see it, put in a question mark into the chat. I see nobody drawing circles, so I think none of you guys can see it. That's what I'm thinking, right? Prove me wrong. Shut me up. Be like, yo, I see it. When he shut your mouth, bro. I see it. I can see the setup. That's one setup. But I'm talking about the setup a bit higher. That's another setup. See, Long just like, yo, I see all the setups. Let's go. Let's go, Nova. Let's go. I love it. And let me break it down. We know we're waiting down here, right? But every setup you come across, guys, we do two things. We wait patiently for the market to come down to us. That's option one. That's one thing we do. And the second thing we do is we continue to mark up our BOSs. We continue to look for the next sign of bullishness, of continuation. Once we get that sign, once we get this change of direction, we know we're right. The market just didn't come low enough to our buy zone. But if we get something like this, I want to continue to run our odds. So we're going to save that for later. And now we're going to use this. Now, if we get stop loss with this, well, hello, we're already ready for this. Give me a 5 if that makes sense, guys. Let me know. Let me know. Give me a question mark if you are completely confused. Completely confused. Let's go. Let's go. Let's go, baby. Now let's take a look. Let's run it. Let's run it. Let's take a look at this. Let's take a look at this. I'm going to mark this up as a breaker structure just for our visual purpose. BOS. Market pulls back. We get another BOS. At this moment, this is our change of direction line. Market gives me another breaker structure. Okay, cool. So now we just continue. So look, guys, you see how easy it is when you focus on one pair and just mark up the detail that has been printed. That's all you have to do. And trading gets that simple. But because it's that simple, nobody does it. That's all you have to do, guys. Mark up the structure that has been printed before you and watch trading become easy. Yes, we're waiting for buys here. Well, let's see. Does the market touch our buy zone or not? The market does not touch our buy zone. So now look, we have a change of direction that happened right here. Give me a 1 if you guys can see this change of direction. Give me a 1 if you can see that the price breaks above that line. If you guys can see that, you guys know how to trade. You guys can visually see the setup. Now we just have to start trusting it. Okay, so we have opportunity right here with our starting point. And we also have an opportunity right here. Let's take a look, layered right on top of each other. I don't know if the market goes that deep inside the zone, but let's take a look. As of right now, that's my opportunity that I'm looking at. So let's just take a look right here, run our 1 to 3s, bow, bow. Let's run it. Oh, hell nah. Oh, hell nah. It missed me. Savage. The savagery happens though. What can you do? At least we were right. And that's the thing, guys. This is also something that we have to put in the back of our head. Just because we can see everything that we want to see does not mean the market is always going to give us an entry. If that would have came down literally 2 pips, that's probably not even a pip. Let's get this out the way. Three pips. This is let's see, 38. Yeah. If the market would have came down 3 pips, we would have had a snipe. You know what's stupid? Spread on EUR cat or GBP USD is probably like 12 pips. But for sure, spread didn't put you in. But it for sure took you out, you know? But again, guys, like this is something we just have to continue to rep over and over and over and over again. Nothing we can do. Were we right on our bias? Yes or no? Yes. There are times where we just have to shake hands with the market and be like, yo, you knew I was going to clap you today. I was ready. Had everything marked up. You're lucky. You're lucky. I'll see you tomorrow. That's all I got to do. And just run it. Do it over the next day. Run it the next day. It'd be like that sometimes. What can you do? Now, you could have, I know Long saw this. You could have tried to trace the trade a little bit and look for the quality setups inside of here. Obviously, the market is doing its thing. And again, if this is something that you like, if you just focus on your one pair, I don't doubt you can just continue to run these. Let's see. That zone probably holds and just continues to run. I don't know. I don't trade this, but we can see. Does it ever come back here? If it does, that'd be crazy because I do see a lot of liquidity. Oh, I bet that was the move right here. Once we change direction, we're gone. Watch. Let's see. The new starting point is right here. Let's take a look. I think that was the move. Yep. See, the more you just spend time on the charts, the more you could just be like, ah, that was the one right there. That was the one, right? That's the move. Notice how, I expected it, clean sweep. This line gave us a clean change of direction, built liquidity to the upside. The more you see this, guys, I promise you, the more you're like, this is the one. Now it's time to start clicking buttons, right? Now it's time to start cooperating in the markets. Not bad. Sucks though. Sucks we couldn't have got this one or even this one. It is what it is though. EUR CAD, or I'm sorry, GBP USD. Do better next time, bro. Get me in there, big dog. Let's see. What other pair you guys want to look at? I think someone said USD JPY. Let's go. Let's take a look. Let's take a look. I haven't marked this up in a cool minute. Let's see. Let's see. Let's take a look. Let's take a look. Just looking at this, everything. Let's just remove everything real quick. Looking at this for reversal, obviously this is my bracket structure. My starting point here on the daily is here, but let's go to the weekly. That's pretty ugly. BOS of the upside, change of direction line is right here. Let's go to the 4-hour time frame. Now, the only thing that looks worth taking inside looks like it's right here, in my opinion. That's the only thing. That's like my last resort to buy. And then I'm gonna start looking for reversals to sell. But even this alone, like this alone looks pretty good. We have the BOS of the upside. The change of direction to the downside. Now notice, what is the market doing? As soon as we change direction, what did we start doing, guys? What can we see? As soon as we got this change of direction, what did the market start doing? Did it continue to drop? Did it reverse or did it start to move sideways? Liquidity, yes. Shoulder, neckline, head, change of direction. We're chilling. We're chilling, right? I like that. I like that. If we can hold this zone and go higher, I wouldn't mind seeing if we could run our odds and take some sells. Take some sells. But I do like that liquidity sweep. It looks like we sweep a lot of this as well. Oh, no way. Did it snipe that shoulder, bro? Let's see. Let's see. It was this shoulder first. Left shoulder, head. Market comes back to give me a right shoulder. No one hit stop loss. My left shoulder, head. No one comes back to give me a right shoulder. This is the next move right here. What it looks like it came back for. Ooh, that starting point, touch one. Let's go to the daily. Where are we at? Where are we at, my boy? Oh, yeah. Wait, where are we at? Right here. That daily shoulder move. That daily shoulder lean, cuz. We could delete that. Snipe. See, that's what I like. That's what I like. So I do think we can actually continue down. US dollar has been going down. USD JPY hit a right shoulder. It has been going down. It's giving us all the right signs. Now, the thing is, too, right? If the market continues to drop, not saying this can't give us a push up, but if it does continue to drop and we change direction here now as well, oh man, whenever it does come, I want to see if we can definitely take some sales in this area, because then we would have a daily left shoulder and then we would have a 4-hour left shoulder right on top of it, right? So this would no longer be here, right? So let's keep that in mind. Just so you guys know, right? That's what I'm expecting. We can get that. All right, now let's take a look. Let's see. I want to look for good examples. Good examples. Well, let's take a look. Let's see if we could have caught this right here. I don't know. I don't trade USD JPY, but let's see if we could have caught that. Let's drop down the 1 hour. Is there anything inside the 1 hour that's like, yeah, I could have caught that. I could have caught that. I actually do see it, but I don't think anybody would actually risk on this. I see a break of structure here, possibly even here, with my change of direction being here. My starting point would be this big candle. Now, the thing is, guys, I like to show you guys on higher time frames. I like to break things down without going to the noise, because if you can see it like this, you don't really have to drop down to the lower time frame, right? That's why I like to stick on higher time, because I don't like the noise, right? But again, when you go down, zones can change, right? The 15-minute might look like this, so you could have possibly missed it. You just got to keep that in mind. But let's drop down to 30. Let's actually cut this down to here. Let's actually cut that down to here. Drop down to 15. Let's go to 30 just to clear some noise up. So yeah, this probably, I mean, that is a break of structure, but if you don't look at it like that, that can definitely be a liquidity sweep. And then this would definitely be my change of direction. My starting point to that is here. And I also have a starting point right here. Right? So let's say we have two setups, right? So let's just run our odds. I believe we're at, I don't know, plus 3%. We're on trade 6 now, I believe, or trade 7. I'm not sure. Maybe trade 6. So let's just say we took sales here, right? I'm going to put my stop loss at my new zone, because why not? It gives me a little bit of space. 1 to 3 risk to award. And if the market does hit my stop loss, at a new zone, at a fresh opportunity, right? So let's take a look. Market ended up respecting that zone. So that's why, guys, we got to take the risk to award as they come. We have to run these odds as they come. All right, let's bet. Let's get it. I see 3. I'm going to look at the first one. Okay, Long is just getting us ready. He about to get us paid, so make sure you guys take a look at this. Make sure you guys take a look at this. Take your screenshots. Long does trade AU and NZD dominantly, I believe. He's pretty good at those too. So whenever he takes a trade setup, I'm definitely curious about it. Yeah, I'm liking these as well. I was looking at pretty similar ideas as well. I do like this up here. We're on the 4 hour. Yeah, the 1 hour time frame in this structure looks a lot nicer, for sure. Is this your good example right here?
Yeah, I think that's a good example because I mean you have your starting point and then you also have your shoulder right here. I kind of missed it. I mean the good entries right here. You can wait for another break of structure if you want to enter again.
Yeah, I like that. And it's following structure. Like, look at how it's breaking structure to the downside. Change of direction. Gave us a nice breakout rally. My starting point to that move is right here. My left shoulder is right here. If I could draw this straight. Oh, that's straight. Straight as it could be. For sure, but you're already in there. Market did what it did. Market literally respected the zone and gave you a brand new setup. Boom, let's work. I do like this. And again, like going hand in hand, right? Long has been here for a while. He understands the sentiment. He understands the trend. And you know, I know he can see this. I know he can see this stuff. But you can see he's not biting on it. He understands the trend. He understands that some of these setups have to get clapped in order for you to continue with your trend and your bias, right? So keep that in mind, guys. You're gonna see some setups. You're like, this is something I'm like, but you have to understand the trend. A lot of the losses that you take, guys, I promise you, if you go up to a higher time frame, you're just going against the trend. I promise you, like maybe even about half of your losses, maybe even more, aren't really because they're maybe C plus or B plus setups. A lot of the times you're going against the trend. So I like this as well. This looks good. And if you go up to the 4 hour, this is probably the sweep of liquidity. And then this is probably, or maybe even daily, this is the change of direction. So everything time frame by time frame looks like it's falling into place nicely, which is pretty sick. I like this. And he does trade GJ a lot as well. So make sure you guys tap into those. I do like the buys down here. I haven't really looked at GBP, Euro GBP, because I just never trade it. But I'm not really liking the equal highs. Let's take a look. We could end it right here, but we could take a look. I don't know. Euro GBP. That looks kind of funky. That was the 4 hour time frame. So let's zoom out. All right. So now this is what I'm seeing right away is market is definitely bullish. So let's take a look. Let's go to the daily time frame real quick. Yeah, not liking that. Mainly because how strong this looks. Now let's take a look. Let's go to the weekly. Weekly starting point is here. Drop down to the daily. Looks like this was a lot of manipulation with Euro GBP. Market does liquidate the brand new starting point and then continues higher. But sometimes that happens, guys, right? And this is the thing. Sometimes it's not always going to respect the starting point structure because it's creating another inverted, right? A lot of us are seeing this higher high, higher low, starting point here, higher high. So they want to take this buy setup, right? And I get got on this too sometimes because you're following the trend, right? But then look, you have to refresh your eyes and ask yourself, if we're going to continue trend, where was my liquidity sweep or break of structure to the downside? Right here. This would be my change of direction. So yes, it did manipulate. It came back into an already used starting point and it gave it trouble the second time. It happens. But now let's take a look. Let's go down the 4 hour. Oh, shoot. Hold on. I'm on backtest mode. Okay, yeah, that makes things a little bit. I was wondering why this wasn't here when I was looking at that. Let's go to the daily real quick again. Okay, yeah, so now this changes things up a little bit. Break of structure, change of direction, does manipulate. It does respect the zone. Okay, cool. Let's see. Let's go to the monthly real quick. Has it hit anything specific? We are going up higher. All right. Bet. All right, cool. I like your zones. We're waiting for a buy zone down here, which is yes, it should be the same area. If we drop down the 4 hour time frame, same area down here. This is clean. I'm liking this, whether it's the starting point or the shoulder. Now this is the only thing I'm curious about. Since we took liquidity here, ooh, it created liquidity. Interesting. If we can keep that, awesome. Awesome. We respected the highest shoulder, and it looks like we respected the starting point. Next play in order would be here. I do like this. Whether you use this one or you use this one, same thing. I like to use the dominant structure though. But yes, this actually looks pretty good. So let's take it back to his. He's looking for the same. Everything in the middle is liquidity right now. Boom. Locked and loaded. We got similar setups now. Similar setups. My shoulder down here. Awesome. I love it. Let's go, mijo. All right, guys. I got to go ahead and hop on a call. I am 3 minutes late, and I already know Miguel going to like me. Sorry, fam. Sorry, fam. But I hope you guys had some clicking moments today. Risk to reward, guys, is everything, and it helps us. If you stay focused on the pairs that you trade and be as detailed as possible in the time frame you're able to trade, guys, good things are going to happen for you. If you guys need help, if you guys are looking at a setup and you guys need some feedback, send it into the charts so we can help you as fast as possible. All right. I'm going to upload this video up to YouTube soon. I will send it into the chats. Guys, trade responsibly this week, and I will see you on Friday. Let's get it.